Like and subscribe to my channel and click the bell icon to get new video updates.
Analysis Bridgewater Overhaul explains the new hedge fund reality. In October, I wrote that the resignation of Ray Dalio, who founded and ran Bridgewater Associates for almost half a century, marked the end of an important era in the hedge fund industry. Dalio was the last of the big investors who, in the 1970s, years ago, created the funds that many hedge fund stereotypes still base on today. Now Bridgewater's new managers are reshaping the company to make it more like the new breed of hedge funds. Dalio chose the most meaningful name for his fund, Pure Alpha. Traditional money managers and index funds generally provide beta exposure, which is the expected return that the market offers investors for passive exposure to key economic factors, such as stock values and interest rates. Returns from alpha are more valuable because they are uncorrelated to key market factors and therefore not dragged down by the crises that cause stock or bond crashes. Typically, they promise specific types of exposure: convertible arbitrage, global macro, managed futures, etc. Many of these strategies mix alpha and beta. Large funds usually limit capacity. There is only a fixed supply of convertible bonds, and only a portion of them are eligible for convertible arbitrage. Depending on market conditions and how many other convertible funds there are, a manager may not be able to invest new money. But Pure Alpha is a promise, not a strategy. If there are no good options in convertibles, it may look elsewhere. Dalios' fund has never capped investments, suggesting he was confident he could always find opportunities, or hire people who could find opportunities, for any amount investors were willing to give him. One of the first acts of Dalios' successors is to limit the size of Pure Alpha. The intention is not to shrink Bridgewater's assets under management. As the same announcement said, Bridgewater would develop more funds with Asia exposure, add products that use individual stocks to express macroeconomic views, and expand the sustainability offering. Bridgewater no longer asks investors to trust Dalios' principles to find alpha in general. Instead, it finds specific types of alpha before the money comes in, and packages it to compete with similar products from other hedge fund managers, and to fit specific institutional portfolio niches. Dalios' other big fund, All Weather, is a pure beta fund, far more diversified and leveraged than traditional index funds, and is managed with the intent to provide acceptable returns, even during major market crashes. This is also capped, although the associated forms of investment are available in almost unlimited quantities. Coupled with other changes over the past 3 years, such as increasing reliance on committee decisions, and the weakening of its quirky workplace culture, this makes Bridgewater similar to its younger peers among the large institutional hedge fund management firms. The question for Bridgewater is whether it can retain whatever was behind its extraordinary 40-year achievement, while jettisoning the business model and principles from that time.